Good morning and welcome to Moving Iron Podcast, Morning Market Roundup with Chip Nellinger. Hey, Chip, looks like it's somewhat quiet out there, but before we got started, you were talking about the dollar is getting banged up pretty good here, so that might help exports a little bit.
Yeah, we definitely had a good export sales report this morning across the board. We haven't seen that for a while. So corn, beans, wheat, soy meal, all exceeding or at the high end of expectations. So very good performance there. And then on top of that, we've got the dollar index dropping into several week lows here as well. So we need a little help with this big harvest that's about to push on us, and we may be getting it in the form of continuing good export sales and maybe this dollar index, pushing down in here into a new low for the last few weeks. Maybe that can continue and continue to make us real competitive in the world market, which we already are from a grain perspective. Obviously, we've got the cheapest beans by, almost $2 compared to Brazil. We've got the cheapest corn in the world, and we're very competitive on the wheat. So a drop in the dollar relative to other currencies in the world is definitely going to help that cause even more, which is what we need.
Right. Earlier in this week, we were talking about the USDA report that came out last week and how they had Iowa and Illinois, especially in Illinois, where they were 13 bushels higher than they were last year. You still feel that? Still feel the same way you felt earlier this week, where you were kind of questioning that a little bit, or do you think maybe there's maybe some of that's going to come true?
Well, I'm still questioning it a little bit, but I throw that with some caution because, I've been waiting several years, and the USDA, they don't call me ahead of these reports to get my opinion, so they don't really care, so I don't matter.
Right on.
But I do think that it's a tough bar to exceed 13 bushels better than a year ago. Still hearing some varied yield results, and there's nothing disastrous, but there's if you take the state of Illinois and cut it up into quadrants, the northeast quadrant, I don't think is even going to be as good. It got very, very dry late there in the season. Those yields are not exceeding, not even measuring up to a year ago. In some cases, 15, 20, 25 bushels below a year ago. There are areas of the I-74 corridor, the Decatur, Champaign, Springfield, Peoria area, Lincoln, Galesburg, kind of that area. Yes, it's good. It's as good, if not a touch better. Not 20 bushels better, so I don't know. The yield results I've heard so far really have me scratching my head as to whether we can, as a state, be 13 bushels better than a year ago. But again, it's going to take a while to figure that out. We might never know that. That's the thing. The January crop report could come, and some of these adjustments, unfortunately, can come after the fact in quarterly stocks reports. 3, 6, 9 months after the fact. But everything that I've heard so far really has me scratching my head whether we can, exceed last year's record yield by 13 bushels in the state of Illinois. And all states, Iowa's way up there. They got several states that are really on the high side compared to a year ago. So, high bar. We'll see if we can, continue to hit that. They're going to get more and more data every month and actual harvested data as we go. So they're going to be able to zero this thing in over the coming months as far as the USDA report and numbers go. But some questions in my mind definitely still out there.
Right on. What are you hearing? Anything else around the Corn Belt? You hearing anything out of Iowa or Indiana or anywhere else that's kind of make you question a little bit maybe what's going on out there?
Kind of same thing, really, which is somewhat the case every year. You have a lot of varied yields out there. Parts of Indiana, central Indiana, really good, record good, better than a year ago. There's other areas to the south and to the north that maybe aren't quite measuring up. So it's really hard. The USDA has a tough job. We like to put our armchair quarterback opinion on that stuff. But, they're looking at thousands of samples, and it is a tough job because there's lots of variability out there this year. But in general, the I-States so far seem to be kind of consistent, good yields, some areas that are better than a year ago, but still a lot of variability.
the cattle market's been on a pretty good run here last couple weeks. Things have been going pretty favorably in that marketplace. So how's that look, and where do you see that headed for the rest of the week?
Yeah, cattle really holding their own. We've got a cattle on feed report tomorrow. Those are always a little bit scary. It's expected to continue to show record amounts of cattle on feed. No change there. We've seen that for, I don't know, 9, 10 months now. But the market gets through that very well. And so that is out there tomorrow. Where is cash going to trade? We probably won't know that until after the cattle on feed report comes out. Obviously, packers are hoping for a bearish report and, to scare feedlots into selling cattle at a lower number. But we're holding up very well in the cattle market. And, we can get through this report without much bearishness. I still think you've got some upside here. Not $10 probably, but maybe a couple more dollars of upside. But you have to, if you're sitting out here with no hedges, no protection in place, and you're a feedlot, you really have to take a strong look at doing something. Maybe doing a portion of what you have left out there, maybe for the December, from now through the December time frame, and getting some coverage, whether that's some puts or, whatever fits your operation. It's a great opportunity. We're at better than break-even levels. And, we've proven in the past, this cattle market is very choppy. It's very volatile. It'll make you look silly in the short run. So it's an opportunity stare us in the face right now. And the hog market really is holding its own too. Kind of quietly pushed up into new highs. We exceeded those previous highs from late August, about a month ago, 6 weeks ago, when we had that first push higher on the swine flu issues. So really good close yesterday. We were able to get through those previous highs. We can close the week strong. That ought to build some more momentum in hogs and build on some gains and push us several dollars higher. So I think the close tomorrow in hogs is going to be critically important. If we can close strong above those previous highs from late August, I think that builds a lot of momentum going into the next week. So got some good, silver linings, some bright spots out there. It's not just all doom and gloom, and the livestock sector definitely is the shining star at the moment.
Could you see a spike in higher on the hog market with the effect that Florence has had with the packing plants down along the East Coast?
Yeah, that's obviously part of this. So, that's still a work in progress and definitely a fluid issue. They're still trying to clean up and get past the flooding and those issues, assess some of the damage. So that is part of this. And that just remains to be seen. That's always a difficult time frame where, you don't know how long are the disruptions going to last. Are they going to get back online quickly? So that is definitely a work in progress, and it's some of what's going on here, but I don't think it's all of it. I think the hog market's starting to stand on its own a little bit, but definitely the disruptions from that hurricane are undoubtedly helping in the short run here.
Right on. Well, Chip, hey, lots of stuff going on. Sooner or later, China's supposedly supposed to come back and meet with us, and sounds like Canada is getting close to, and the U.S. are getting close to coming together and being friends again when it comes to NAFTA. So plenty of volatility out there, which is opportunity to make some money. So if guys want to work on their marketing plan, or if they have a plan and they want you to look at it, how would be the best way to do that?
Yeah, best way is just call our office, 309-550-7213. Obviously, no obligation, no pressure. We'd love to chat with you. It's critically important, like you mentioned. It seems like, the markets are down here in the grains, near the lows, multi-year lows in beans. There's no opportunities, but there are. There's issues out there right now with crop insurance, with basis, with logistics and storage. Definitely now is the time, even though it's busy with harvest, to keep that at the forefront. So we'd love to hear from you, 309-550-7213.
And because of technical difficulties, we couldn't see Chip's beautiful face this morning, so you have to wait till tomorrow. And then when that happens, we'll talk to him then.
I call that the rodent bait. That keeps you put my picture up, or if I'm on TV, you play that, it'll keep the mice away.
I understand the feeling, man. They get to see my beautiful face every day too, so I get that feeling, man.
And they need a break from it. They'll probably get requests like, "Hey, I love it, but just keep keep your guys' ugly faces off of there.
Yeah, I understand that. That's why I do my other podcast via audio and not video. So
Yeah.
works out.
Right.
All right, Chip. Hey, man, have a good day. We'll talk to you tomorrow, and we'll talk to you then.
Sounds good. Have a good day.
All right, Chip.